What if I told you that one of the most profitable pharmaceutical companies in the world is currently trading far below its all-time highs, while its closest competitor, with lower profits and almost identical revenue, is trading near record valuations? Today, we are comparing two global pharmaceutical giants, Eli Lilly and Novo Nordisk. Eli Lilly currently has a market capitalization of around $954 billion, while Novo Nordisk stands at approximately $214 billion. Both companies dominate the rapidly growing weight loss and metabolic drug market, and both are fundamentally strong businesses with long-term global relevance. Before we go any further, this video is for educational purposes only. It is not financial advice, and nothing here should be taken as a recommendation to buy or sell any security. Always do your own research and consider your own financial situation before making investment decisions. If you appreciate clear, data-driven analysis like this, consider subscribing to the channel. It helps support long-form content and allows me to continue producing detailed company comparisons like this one. The pharmaceutical industry is currently undergoing a major transformation, largely driven by GLP-1 drugs used for diabetes, weight loss, and metabolic health. This category alone is expected to become one of the largest pharmaceutical markets in history. In this space, Eli Lilly and Novo Nordisk are the two clear leaders. Eli Lilly has gained enormous attention through products such as Mounjaro and Zepbound, while Novo Nordisk has become almost a household name through Ozempic and Wegovy. Both companies are seeing extraordinary demand, strong pricing power, and expanding global reach. However, when we move beyond headlines and look closely at the numbers, the comparison becomes extremely interesting. Let's start with size. Eli Lilly's market cap is roughly $954 billion, making it one of the most valuable pharmaceutical companies in the world. Novo Nordisk, by comparison, is valued at around $214 billion, roughly 4 times smaller. Now let's compare profitability. Eli Lilly's net income currently stands at around $10.5 billion. Novo Nordisk's net income is approximately $14.65 billion. In other words, Novo Nordisk is significantly more profitable, despite being a fraction of the size and market valuation. That alone is unusual in large-cap stock comparisons. Revenue tells a similar story. Eli Lilly generates roughly $45 billion in annual revenue, while Novo Nordisk generates about $42 billion. Despite a nearly identical top line, Eli Lilly's market capitalization is more than 4 times larger. This naturally raises an important question for investors. Is Novo Nordisk undervalued relative to its earnings and revenue? Or is Eli Lilly priced at a premium because of future growth expectations? The answer is not simple, but the valuation gap is too large to ignore. Another major factor to consider is price positioning. Novo Nordisk reached its all-time high in June 2024. Since then, the stock has declined roughly 66% from its peak. This decline did not occur because the company's business collapsed. Demand for its products remains extremely strong, revenues are healthy, and profitability remains robust. In contrast, Eli Lilly reached new all-time highs recently, including levels seen toward the end of November. That means Eli Lilly is still trading near peak optimism, while Novo Nordisk has already gone through a substantial correction. This does not make Eli Lilly a bad company. On the contrary, Eli Lilly is an outstanding business with a strong pipeline, excellent execution, and enormous long-term potential. However, from a valuation perspective, buying near all-time highs naturally carries different risk-reward dynamics compared to buying after a deep correction. Dividends add another layer to the comparison. Eli Lilly currently offers a dividend yield of around 0.7%. Novo Nordisk, on the other hand, offers a dividend yield of approximately 2.5%. While neither company is a high-yield dividend stock, Novo Nordisk provides a noticeably higher income component for long-term investors. This means investors in Novo Nordisk receive ongoing cash returns while waiting for potential price recovery or future growth, which can be particularly attractive during periods of market volatility. Product strength and pipeline depth are also critical. Eli Lilly's weight loss and diabetes portfolio is excellent, and its research and development spending is among the highest in the industry. It deserves its reputation as a leader in innovation. Novo Nordisk, however, has long dominated diabetes care and was among the first to fully capitalize on the global demand for GLP-1 therapies. Ozempic and Wegovy remain market leaders in many regions, and in several countries, demand continues to exceed supply. Importantly, Novo Nordisk is not standing still. The company is actively developing next-generation treatments aimed at improving effectiveness, reducing dosing frequency, and expanding into new metabolic indications. These developments could further strengthen its position in the weight loss pharmaceutical market over the coming years. At this point, if you are finding this comparison useful, please consider liking the video. It helps the channel reach more viewers and allows me to continue producing in-depth, research-based content. So why are some investors starting to look more closely at Novo Nordisk at current levels? The logic is relatively straightforward. The company is far smaller in market capitalization, but generates higher net income. Its revenue is nearly identical to a competitor valued at 4 times its size. The stock has already corrected significantly from its highs, potentially improving the risk-reward profile. It offers a solid dividend yield, and it operates in one of the fastest-growing pharmaceutical segments in the world. None of this suggests that Eli Lilly is overvalued or poorly managed. Eli Lilly remains one of the strongest pharmaceutical companies globally. However, from a valuation and positioning perspective, Novo Nordisk may currently offer a more attractive entry point for long-term, fundamentals-focused investors. Ultimately, markets move in cycles. Great companies can become expensive, and equally great companies can temporarily fall out of favor. When that happens, opportunities may emerge for patient investors who focus on fundamentals rather than headlines. If you want more long-form company analysis, valuation comparisons, and clear explanations of how professional investors think about stocks, subscribe to the channel and turn on notifications. Thank you for watching, and I will see you in the next video.